Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to be talking about a little bit about uranium. Someone had, forwarded a question to me or tweeted a question at me, so might as well answer it. I do answer these questions just like I do in the Platinum question and answer sessions. I answer them just like this, basically. And you can find that at finding-value.com. It's in that little icon down there, picture. So let's dive in. I'll give you my financial opinion, and I'll read the question, kind of answer it using charts. And again, charts aren't everything. Some people are very driven by the charts. I do think they mean a lot, but you also have to pair it up with the conditions that the market is trading under. And you also have to, I guess, align that with the ratios and how cheap the asset is. Now, uranium is incredibly cheap still. So we're still below the cost curves of a lot of the various developers out there. And what does that mean? It means that in order to turn on that production from those developers, prices have to go up. And if you've got inflation in your labor, in your startup costs, and all this other stuff, that cost curve continues to increase on to the upside. So when looking at it, I think we're still very cheap for uranium in relationship to ratios, asset versus asset. And we're below the cost curves of a lot of the different companies to start back production, which makes me think that uranium is underpriced and the price has to go higher in order to turn on more production in the future. That is my take on it. Now, this is a question. We'll go over the question here. It says, what do you think at all these people? Uranium miners have not picked up with the likes of Silex Systems. Are uranium miners done? Brandon Monroe, Antonio, Patrick, and even myself. Well, thanks out for reaching out. Thanks for reaching out to me. So Silex is a laser uranium enrichment company. They are a developer. They're building their enrichment process. I think they've got the process, but they don't have it in commercial production yet. And I think they recently raised some money and did a private placement or something like that, diluted shares a little bit, and it did impact the share price some from that share dilution. So what he's saying, and he's comparing Bannerman and Silex. So let's do the comparison. So here's Silex Systems. This chart is pretty busy. This is a big picture view of Silex Systems. What you have is basically a down, this was down, we went sideways, and then we rolled on higher there. This was the last bull market in uranium, was this bottoming pattern and the move up. During that time frame, we had an increasing real estate price, increasing new housing starts. All of the thesis occurred from about this point this way. We had an increasing interest rate environment. All of those conditions that happened in the mid to late 2000s are occurring today. We're going through it. We've got increasing interest rates. We have a housing boom. And I know things are slowing down in the housing boom. I understand. But all those conditions are present over here, just like over here. Now, if we look at this, and I'm just going to kind of go over some technical analysis for everyone, just because this is what we do on the Platinum, basically a daily question or question and answer sessions on the weekends. Generally, what you have at your bottom here, this is looking at the last bull market, is you get some sort of basing pattern. And sometimes on the right-hand side of this basing pattern, you can get a Jesse Livermore accumulation cylinder, which is wave 1 and wave 2 at the end of that accumulation cylinder. This one is a bottoming pattern. We broke out, we sat a little bit. A lot of the times what happens is you either sit underneath the basing, or you sit on top of it, or you do a little bit, a combination of both. This one has a combination of both. And a lot of the picks that we're looking at in different sectors look exactly like this one. They come up, they hit their head, they hit their head, they come back down, and then they kind of go sideways. And we kind of like to buy in this general vicinity in here before it takes off. And I know some people will say, well, how do you know it's going to take off? How do you know all these things? Well, what I look for on the big picture view, just to kind of show you guys, you get a downward momentum, a sideways basing pattern, and then you usually get the right move to the upside under the right market conditions. When ratios are cheap and when you have, I'll just say, what we're looking for is an alignment. We're looking for inflationary period. We're looking for a cheap asset. And then we're looking at potential stocks to invest in a cheap asset. And what this means is if you get the momentum downward, you get the momentum sideways, and then your lows start to come up like this. This is a really low, high risk, or I should say high reward, low risk entry point. The downside here is very limited, but the upside potential is massive. In this case, your upside potential, if your buy point is here, and let's say your downside risk is here. So your downside risk is this, and your upside potential is this arrow all the way to the top. That's what you're looking for. You're looking for lopsided, high rewards, low risk entry points. And the way that you find these entry points is you look for a sector that's been beaten down. The sector's beaten down, and then we're starting to look at basing patterns, Jesse Livermore accumulation cylinders in a wave 1 to wave 2 pullback. This here is kind of like your first wave coming up, and then you get a little pullback here. A lot of people get scared on this pullback in that circle there. A lot of people get scared there. And that is when you should be buying it. And I'm not trying to give advice or anything like that. What I'm saying is when we get pullbacks, especially if you can identify where we're at with the risk reward, and if your rewards are just massive to the upside, that is your ideal entry points. So when you look at this, and this does have it, I'm going to zoom way in here. I got to go to the dailies first, though. So if we zoom in here, I'll show you some similarities between this bottom first, and you guys can see the similarities of other companies. So what I'm going to do is I'm going to zoom in on this section here. And what we have, and I'm just going to draw kind of, quickly, is I draw this like this. This here is your accumulation cylinder. So it comes down, we hit our head, and then we went into an accumulation cylinder. And what I look for in these accumulation cylinders, and I'll label it here. This is 1, 2, 3, 4, 5's the bottom here, 6, and then 7. And then generally in this general location, you get like this hump. So you come down, you get a hump, you get a lead-in pattern, and then you start to take off. This is like the ideal entry point if you can identify this type of pattern in the charts. This is known as a Jesse Livermore accumulation cylinder. And then what you want to do after you get point number 7 is you just shut up and you ride this thing higher. You don't sit there and try to be like, oh, I'm going to time every little, up and down movement. No. That's not what you want to do. Irrespective of what the market is out there, you want to, at least my opinion is, you want to get in, you want to hold on, and you just hold on and hold on and hold on. And then eventually the big moves start to come. You get this period where it kind of chills out here and you go sideways. Sometimes they're in a kind of a accumulation where you enter it from the bottom. It's a pennant formation or a flag formation, and then you rip it again. That's where you get those pause points. And hopefully you can identify the double top. That is the Batman pattern. So these are the patterns that I go over on the website with a variety of companies. What I am doing is I'm identifying the entry points down here. And that is kind of, we've got a couple really awesome setups. And generally speaking, and I'm going to run it because some people ask this question, if you get from the bottom here, you come on up, this one ran massively to the upside. It vastly outperformed the 4.236 upside potential here. And one thing I also wanted to talk about in uranium is we didn't have shortages in uranium during this time frame, during this run. This was driven by inflation in the system and money rotating into different sectors. This is money rotating out of bonds, very little money out of bonds, and money rotating out of stocks and finding its way into commodities. Oil was moving higher. All the other commodities were moving higher. So what is important here, in my opinion, is number one, you need to identify what market conditions there are. In 2000, 99, 2000, let me actually make this a vertical line so it looks a little bit better than me just kind of throwing it in here. So 90, I'd say about this time right here, we got a buy signal in commodities. Some of these companies and sectors, they lag. They lagged the beginning. So there's sectors that took off in 99, 2000, call it oil and some of these other ones, and then uranium lags behind it some. Then we got basically the beginning of the accumulation cylinder, what happened at the bottom of a double bottom, basically. And we started to move our way up, and then we hit a peak all the way at $13, and the ideal entry point was probably about 70 cents. Big time move there. Now let's see what we've got. Let's this is basically last bull market. Let's apply what we know today to that. Now, this here is a basically a wedge that was formed. We broke out to the downside and went into what's called the Valley of Despair, is what I call it. The Valley of Despair is this thing kind of, it consolidates in three humps. It's one hump, two hump, three hump. This thing went down into what I consider to be the Valley of Despair. It broke to the downside. And then usually you get some sort of basing pattern. Much like last time, we get the exact same basing pattern. And you come up, you come down one last time, and then what happens is you go into an accumulation cylinder. People accumulate the stock. This is the smart money. So what you get is you get this kind of double bottom, and then we went straight into an accumulation cylinder. Just like last time, it's called the Livermore accumulation cylinder. We get what's called a one. Oops, wrong one there, guys. Wrong one. No. There we go. 1, 2, 3, 4, 5. And these are the points. It's 1.2.3, 4, 5, 6, 7. And how you know you're at the bottom of 7 is you usually get these like little humps like that. You get one hump here, you get a lead-in pattern, and then you break. So this guy here has already broken. It's already mid-stride heading higher. So Silex is already taking off. It's already, here's the accumulation cylinder. It's already taking off. And, you know, some people are saying, is it a good time to buy this when it's here or here? I don't like buying it when it's mid-stride. I like buying it in this general vicinity and holding on. And sometimes this will even come up and come all the way back just like it did. And it'll scare people. It'll scare people out of your shares. And the very thing you should be doing is accumulating more to ride the bull market higher. So this is what Silex looks like. And yes, Silex has moved up quicker than Bannerman. Now, what we want to look at is Bannerman in an accumulation cylinder, much like Silex? This is your accumulation cylinder and the launch. This is your accumulation cylinder, and then the launch is, we're mid-stride in launch right now. And they did dilute some shares and it did pull it back, but we're still kind of mid-launch in Silex. So let's look at Bannerman. I'll go to the ASX and we'll take a look at the charting here. So here's Bannerman Energy. We're coming up in it. So what do we see with Bannerman Energy? It's the same setup as Silex to some degree. Let's zoom in. I've never even zoomed in on this little section here. I don't know if we can see anything or if we have enough data to determine how this started in the beginning. So we're going to go to the beginning of the last bull market for Bannerman and take a look. If it decides to load, there we go. So what we're looking for is, and I don't know if I have enough data here, but if I were to kind of guess, we probably have some sort of accumulation cylinder that happened. And I know I've got some data that's missing. So it might be 1, 2, 3, 4, 5, 6, 7 is the bottom there. And you can see we get these like humps, these little lead-in pattern humps. and then they take off. So Bannerman did have an accumulation cylinder. It started before 2005 of May, and we accumulated, and then we went off for a run. This is the hard part because you get thrown around with multiple things, and you got to hold on to this bad boy. Now, this is the beginning of the slowdown. This is probably the peak, and you'll probably get one more last peak, which we call to be the Batman pattern. And there's kind of that last peak. It's a massive pattern there. So this here ends up turning into kind of that Batman pattern there. You can see, hey, Batman, what's going on? See? But that's the pattern that we look for. That's a double top. You want to get the heck out. And then we go back and we basically repeat the cycle. Silex had that for the most part, squeezing up, just like this did. It went into the valley of despair, just like Silex did. So we've got that going on. If we zoom in on the bottom here, what we should see is we've got a squeezing up that broke out in 2020. I bought right in the bottom of this squeeze up here. Yeah, it was well timed, and yes, I am somewhat lucky. I will admit it. Now, another thing you can do is we can kind of rotate this, and this is an accumulation cylinder as well. And what I think that we're probably doing is a 1, 2, 3, 4, 5, 6, 7. So if we were to label this, this is your 1, 2, 3. This is your 4, 5, and then 6, 7. Now, this bottom doesn't have to be where it's at. It can shift down here. It doesn't have to hit these bottom points. From what I've seen in a lot of the different things, this can move a little bit. So if we come back down, it's not the end of the world. But here's Bannerman, and it's the 1, 2, 3, 4, 5, 6, and we're still kind of putting in those humps, in my opinion. Sometimes you can get all squeezed up, where all of this motion squeezes up, and it becomes a little bit hard. But I do think that we're probably going to put in some sort of pattern and then roll on higher. And I do think that this is an accumulation cylinder. So in my opinion, I like to buy the ones that are lagging and, quote, underperforming, because we don't buy price. We're not chasing price. We're chasing the pattern that humans are creating, and we're chasing something that is of better value, perhaps, and hasn't moved yet. And we can also see with the leader, CCJ, Camco. Hopefully this pulls on up. I can shut that off. Camco's our leader, and that also has the 1, 2, 3, 4, 5, and then 6, 7, and it's all like squeezed up real tough together. Sometimes this may, come up. It may come all the way back down before it heads higher. Maybe it doesn't. Again, this isn't going to play out exactly the same every single cycle. What's important is that we are identifying that we're in an accumulation cylinder. I mean, that's really what's important. And then you just have to wait for the participants and the humans to come in and run it on higher. But we've accumulated this. People have been accumulating it, and they're leaving the traces of that accumulation in this cylinder that it's created. If we do one last look here in Camco, our leader, we also had a accumulation cylinder, 1, 2, 3, 4, 5, 6, and there's your little hump 7, another little hump. These little humps, they kind of happen at the bottom, and sometimes they're like a V shape, and they're different shapes. But this is your accumulation cylinder, and then we just went on to ripit.com right after. So yeah, that's what I think on this. That's my opinions, and I can tell you these accumulation cylinders, they're not just in uranium, and they're all over the place. They're in oil. They're in energy service companies. They're in a variety of different uranium stocks. They're in some of these explorers too, as weird as that sounds. And some of them are very low, like incredibly good risk reward entry points for those that are patient investors. So that's what I look for, is I look for the patterns. I don't chase price, I chase patterns. And I chase value which I think uranium is of incredible value, the actual physical uranium, and the price it's at in relationship to other assets. You can't, in my opinion, you can't really beat it. But the only thing that has concern around some of these companies, and it's not a huge concern, but it is a concern, is they're not cash flow cows. Cash flow cows will at least give you the opportunity to get dividends, to have share buybacks, and all these other things. They can kind of take control of their own destiny because they have the cash to do it. These uranium companies are a lot more speculative. There are a lot of them are in development phase, and they need cash to develop their mines. So that's a little bit different approach, a lot more speculative. I still take bets like that because I think the upside potential is so massive in them. Uranium also seems to move with the markets as well. So if uranium were to go up, it seems like all of the companies in the sector move up with it. Other sectors, I think it's a little bit harder. You have to be a lot more selective with the companies. Obviously, you still want to be selective here, and you can value these companies by pounds in the ground and all these other metrics that we have. And I have that all on the website, the finding-value.com website. But this is some of the stuff I look at. These are some of the setups that I see in the markets. And, this is a competitive advantage. I'm sharing a little bit of it, of what we do and some of the pattern recognition and fractals that we look at. And sometimes those fractals that lead into this do pan out very well. And the larger the fractal of the lead-in pattern can sometimes lead to very large upside potential after those fractals, the Livermore cylinder patterns are there. So I do look at all that stuff, and I think I've identified basically all of the best fractals that I have found and know of in a lot of these different sectors. And we're finding more as a community on the website. We continue to find more, and we continue to refine our approach and refine what are companies that we should be looking at. And sometimes we go from large cap to mid cap to small cap, and look at the small caps last because they usually last or lag the most. They could also be the highest cost producers, which haven't took off yet. So lagging isn't necessarily a bad thing. It might be a great thing if you're looking to enter the market and you want all that big upside potential, and you've got companies that are lagging, which gives you the ideal entry point. So that's what I've been doing. I think a lot of people are gaining some success, and this does take time. It's not a quick movement because some of these things can stay down for 6 months, 7 months, or longer. And right now we've had that pullback, which is the pullback in that accumulation cylinder to what I think are very close to ideal entry points here. So that's what I've got for today, guys. That's where I'm going to end it. Hopefully this reaches you guys well and gives you a little bit more confidence. And if you guys are interested, you can definitely check out the website. You can use the word discount in the coupon code for a discount. I also have, you get a larger discount on a yearly membership versus the monthly memberships. And if you've been with me for a year and you're watching this, message me directly. I'll even give you a bigger discount if you want to renew to a yearly membership. But that's what I've got for today. We'll catch you later. Hopefully you guys enjoyed it. Thumb up, subscribe to the channel. We'll catch you next time. This is Finding Value.